we've got some interesting stuff that took place yesterday. After the bell, we saw NVIDIA surge higher here on some really good earnings. And I think it was not just NVIDIA. We also had Salesforce. Well, initially it moved higher, then it moved back down. I think Elf Beauty was also a big mover. Yep, that's another stock I used to own. I wish I owned it more now. My goodness, 20% at one point from the lows back high, 11.5% in the pre-market here. Big moves for a lot of stocks, and the indices surged as well, as you might imagine, with NVIDIA being kind of a key player at the table. We saw those NVIDIA results come in better than expected on both the top and bottom line. I heard someone say that is the eighth consecutive quarter that they have beat both their earnings and revenue. Consistently, this company has just come in and beaten expectations. It was and still is, in my view, the leader of the AI trade, the AI movement. All this excitement around AI. Obviously, you need powerful chips in order to do the kinds of things that people really want to do with AI. And we saw in advance to this, I made a post in our Telegram channel. Let me see if I can pull this up. I made a post before the earnings just saying, and I didn't know that the earnings were going to be this good, but I assumed that they were likely to be good based on a few things, specifically with several of their major customers, Microsoft, Tesla, Meta, all these companies that are big customers of NVIDIA. No wonder why NVIDIA has grown so much. Their biggest customers are the biggest companies in the world. Microsoft, Tesla, Meta, all these companies buying the heck out of NVIDIA chips. And in those earnings calls, which we got before NVIDIA's, most of these companies reiterated their strong intentions to spend big on AI, which who is the big winner in selling AI? NVIDIA. So I mentioned that I like this company for the long term. I've been a shareholder of NVIDIA for, I guess, a year and a half now or so. I bought it in a dip. I bought more of it in the recent dip that we saw in the tariff trauma stuff, everybody freaking out about tariffs. I went and bought some more in NVIDIA. It's a company I like, and it was on sale. And I'll talk about, I could go into detail. Actually, what I'll do is I'll show you the chart that I pulled up from the stock box. Just pulled up this kind of our financial summary on the stock box, which is another tool that we use for stocks. Their income, their revenues growing at a steady pace, and their price to earnings. I know it's hard to see on this screen. They're actually priced relative to their own history pretty cheap. NVIDIA's stock relative to its earnings growth does not look outrageously expensive to me. So anyways, I own the stock. I'm happy to see it up again today. Puts us in terms of where we are, right? So there's that yellow, that's the pre-market. The market has not yet opened up. How far are we from the all-time highs? About 8%. I would not be surprised whatsoever if in the coming months we do continue to drive higher and to take out those highs and we put in fresh highs for NVIDIA. I think so too with the market. So feeling really bullish about the state of things. We had all things considered, my gosh, the bears came in heavy and loud about earnings season, saying that companies are going to cut their guidance because of all the tariff stuff, and companies are going to miss revenues, and it's going to be awful, right? That was the sentiment out there. And what we actually got from earnings season was resiliency, strength, and far fewer companies than expected issuing negative guidance or no guidance at all. We saw for the stock market bulls out there, earnings season was a huge win.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Not only was earnings season a huge win, the development in the trade stuff, I would say, is a huge win, because we've seen the Trump administration, swing a big hammer and then take it back, right? That's kind of what's gone on. Like, there was this big fear that there was going to, and I've been ranting about this a lot recently, but it's important that we internalize this, because there's a lot of people who are just like super perma bearish in all this, saying that, we're entering into a global recession, earnings are going to be horrible, CEOs are going to lay off everybody, it's going to be the end of the world, right? Doomsday was everywhere during this time. And then just like that, we had one of the speediest recoveries that we've ever seen in stock market history. You're talking about from the lows here, guys. The NASDAQ was at one point up in the pre-market here, 33% in 52 days, 37 trading days. Incredible, right? Now, again, I think that the reason for this sharp bounce back is not, I'll say this, it's not just like this move lower wasn't just because, oh, Trump's awful. This move up is not just because, oh, Trump's awesome. Let's not be silly about this. The reason is because this was a self-inflicted wound. By doing all the tariff trauma stuff, everybody's getting a tariff. That's self-inflicted. You can stop doing that activity if you want to, and that's what Trump administration seemed to have done. Now, it doesn't mean that they're done with tariffs. It just means that they were like, okay, we're going to do the ultimate extreme tariffs. And they said, you know what, let's walk it back. And the market absolutely cheered, right? So the market absolutely hated it. They were like, no, this is stupid. We're going to go into a global recession. I'm out of here. And then they walked it back. And the market said, okay, that's better. So I think it's very natural for this market to say, okay, the worst is not going to happen. So where do we go? We should go higher, right? Because company earnings grew. Company earnings look good. The economy is holding up well. Yesterday, we did a deep dive on the labor statistics. We did a deep dive on employment data. We looked at inflation data. We have a good canvas that we're working on, right? Overall, things look decently good for stocks. That's why on the Edge Finders calculations, we are getting very strong readings. We're getting a plus 15 on the Dow Jones. S&P is getting a plus 13, NASDAQ plus 13, Russell plus 10. Indices have been screamingly bullish on the Edge Finder for the last few months. And it's been awesome. And I'm not just saying that because I can show you the historical score. If we were to pull up, let's go NASDAQ. We did this the other day. So let's go NASDAQ and we'll go back since the beginning of the year, right? When did Edge Finder get bullish on the S&P 500 or the NASDAQ specifically? It was bullish in January. It lost its bullish reading February, right? So in February, it was neutral, out of the way, no trades. We got our full initial bullish reading early in March. Then we got some more bullish readings and we went back into neutral early in April. But then April 15th, you got a very strong and persistent bullish rating on the Edge Finder. And you could see the reaction to price during that time. So anyways, we have news coming out here. We have preliminary GDP numbers. Let's see how those impact the charts here today. I'm very curious. We have about 40 seconds to go until we get preliminary GDP numbers as well as unemployment claims. Let's see how those come out. Stick around after the move. We'll talk about how this potentially impacts Edge Finder scoring, but also about how it, what it says about the US economy. We've got about 30 seconds to go. Again, we're going to see the preliminary GDP numbers. So we have the advanced, then the preliminary comes out, then the final GDP. So we're getting the midpoint of GDP numbers for the first quarter here. And so let's get an idea here. Coming in, breaking news. Still waiting on the number to come out. We've also got, like I said, unemployment claims dropping as well. All right, preliminary GDP came in better than expected. We were forecasting for minus 0.3, minus 0.2 came in. However, unemployment claims spiking up to 240,000 jobs or unemployment claims compared to the forecast of 229. That is a little bit of weakness there. It's a little bit of weakness in the unemployment claims, a little bit of strength in the GDP numbers. Let's have a look at the reaction here in the markets. Dollar index is lower off of that figure. Gold is higher. So we have seen, in terms of our preliminary number, a better than expected print. Now, this is still contracting GDP. However, it's contracting less than expected. It's like if you were looking at a weekend weather report and it said the weather's going to be stormy and rainy all weekend long, and instead you got some sunshine, some rain for the weekend. Still not perfect, but way better than expected. So where does this put us? Well, unemployment claims spiking up. That is obviously not ideal, but it's not crisis mode. If we take a look at unemployment claims before this week, let's see. Unemployment claims, here we go. So this data hasn't yet updated. It will update in the next, very shortly. If I take a look at the historical, however, what you can see here is that we've been hovering around. We've had these spikes before, like 241K came in, but I wouldn't read too far into it with just one print. We get this weekly. There is some noise that can occur, right? And we saw last time that occurred, it came right back down the following week. So could that be a persistent thing? Well, again, let's see if we get like a couple weeks of increased unemployment claims. That would be different, but I wouldn't read too far into a singular pump up in unemployment claims this week. It's about what, 10, 11, 12,000 more than we expected. So not insane, but certainly something to keep an eye on. They also revised by 1,000 lower the previous week's number, and preliminary GDP price index came in as expected. Okay, so market reaction here, S&P 500, a little bit lower from where it was, but we had a huge rally off of the NVIDIA earnings. NASDAQ also pumped higher. Gold is higher here today, back up to 33.11 at the time of recording. Bitcoin's up to 108. Dow Jones moving lower here. Russell moving lower here. But again, both of these pumped higher on the overnight kind of earnings that we got. The dollar index is lower here. Let's take a look at the dollar here.
NJ, which I do have a trade coming from this sort of reversal, but it's like a 90 pip stop loss. So sorry, I forgot to put it in. And it's currently running some okay percentage. So this is more of a long-term play and just trailing the position. So for NJ, I'm just kind of watching this, keeping it running, trailing it on these, let's say, swing lows on the daily chart. But for entries, I think the pound dollar is looking very interesting right now because you have the edge finder, which is bullish. You have a good environment, in my opinion, for the pound dollar to go up. Pound has been getting some really strong numbers, and we broke out of this key level of resistance right here, which we now sort of retested. So for me, I'm now looking for any sort of an entry on the 1 hour chart, like a flag or a little bit of a pullback, break of the high and a retest. And I'll be pretty happy to get in, probably with a stop loss of, let's say, 100 pips. I think that would fit my game plan nicely. And then the plan is to just trail the position if it goes to the upside. If it does go down and take me out, then I'll need to reassess the whole situation. So yeah, that's it.
Very cool. Miko, same question to you. What's on the watch list for you?
Yeah, so at the moment, I'll probably say some shorts on dollar CAD look really good. I'm pretty bearish on the USD, and I'm liking the area which we are currently rejecting. I would like to see a bit more development here, perhaps a bit of a double top before I do enter, but for the time being, it does look like price is respecting this area very well. USD CAD as a whole has been on a very nice bearish trend here, and I do think there's still a bit more juice left to squeeze. I'm pretty bearish on the DXY. I think that's still got room to fall. So I think dollar CAD can still see some more downside, and this zone looks to be proving as solid resistance at the moment. So as long as that can hold, I do expect us to hit the lows and potentially go further as well. Currently I'm long on New Zealand CHF, but I won't be looking to enter that one now. It's been a bit flat, this one. CHF pairs haven't been moving great over the past few days, but I do think there's a lot of upside for New Zealand CHF. It's coming from all-time lows. I do think we can see a bit more of an uptrend here. But in terms of right now, I think dollar CAD looks really good. Pretty bearish on the USD, so anything against the dollar right now looks pretty good to me, and dollar CAD looks probably one of the better ones in my opinion.
Yeah, it's interesting. Both you guys, dollar CAD looking interesting. I also find it interesting that all three of us are kind of looking at the New Zealand dollar with a little bit of a bullish bias. Marko, you mentioned NZD JPY, and Miko, you mentioned NZD CHF. The New Zealand dollar has been really strong here recently, a little bit of a bounce back across a lot of different currencies. I also like NZD JPY. I'm long and about break even on this trade right now. I was looking to, I think last time we spoke, I was looking for a move down here to add a second position to my dollar cost averaging approach to this pair. Looking for at least a move up to 87.5. So I would say that's probably my chart of the day as well, just to go off of the New Zealand dollar concept. Marko, you mentioned the British pound against the US dollar. Any other dollar index or dollar crosses that you find interesting right now?
So other than the pound, nothing is really on my watch list. They have some other things such as indices and Bitcoin, but for currencies, it's purely pound dollar and New Zealand yen. I don't want too much exposure, to be honest. I don't want to go long on multiple currencies, so I have a top pick for the yen, I have a top pick for the dollar, and then I would really like to get in the Nasdaq, but it is just running away without me. So I was looking at this level, for example, this level of support, which we almost hit but didn't, and now we moved away from that. So I'm looking at this level of support. This is kind of the new area for pullbacks. I don't want to buy here on this high. Hopefully we do get a little bit of a pullback, a little bit of a retrace, so that I can try to get in on a buy setup and take advantage of the Nasdaq, because I do think it's gonna go to the all-time highs, possibly in the next few weeks, next few months. I do think it's gonna happen pretty soon. So very bullish on the Nasdaq and also on the DAX, which is even more powerful than the Nasdaq. It has touched this 20 EMA, so kind of broke out of the all-time highs, retested, and now it's continuing up. So actively looking for buy positions at this point right here. And that's kind of the exposure that I would like to have. So I have NJ, I'll have probably the pound dollar this week or the next week, and then the indices is something that I'm closely watching as well.
Yeah, it's the DAX chart that you mentioned is a sore subject for me as well, because that move down to, like, you can see how beautiful on the retest that reaction was, right? It was like you broke out, you retested it, and it was just a split second that it was there before it just rallied back higher. So I was watching it on stream at that time. I did not get into that trade. I did get the Russell long, which is also going well for me, but the DAX, like you said, just is so strong. It's past the all-time highs, which we talk a lot on the show about relative strength, and the DAX in terms of the indices definitely has that, right? It is very, very strong this year. In fact, outperforming many other indices at this time. So interesting stuff, to say the least. Miko, I want to ask the same question to you. So I'm going to make a guess that all three of us think the pound dollar looks really good. It's a really strong chart. We talked about this, I think last week. We got that breakout that we were all looking to see if it would happen. It pulled back, and I was looking at this last night, and I decided, if it's down there in the morning, if we come down and test this area, I'll probably get long. Unfortunately, by the time I got to the desk this morning, it had already bounced from that level. But I'm curious, Miko, pound dollar or other charts on the US dollar, because you mentioned you have a bearish bias on the US dollar, which would of course suggest you think potentially that we go higher for things like pound dollar, euro dollar. Do you have any top chart ideas on the US dollar?
Yeah, so yeah, I agree. Pound USD looks really good. Momentum looks really good. Market structure looks good. It ticks a lot of boxes. And of course, trading above that level of resistance, which you broke through last week as well. So pound looks really good. I feel like I kind of missed the boat on that one as well. We're very close to the high. So that's kind of why I prefer USD CAD, because I think I still got an opportunity to get involved. I do think most USD pairs will probably be stronger than the dollar, so I'm actually just looking to trade that direction. Mostly, I think NVDA is one that is interesting as well. It's kind of just consolidating right now. So if we can see a bit of a breakout similar to pound USD last week, where we had that really nice explosion at the end of the week, I think there's some really nice retest opportunities, and there's room to the upside for this to move into. So I think there could be a decent trade there, especially if NVDA becomes strong as well and maintains that strength. I feel like a break and retest opportunity above this level, 0.602, could provide some nice longs as well. But yeah, waiting for the break to really confirm that. Euro USD, I'm pretty bullish with that one as well. I don't think the setup looks as crystal clear as like pound USD does. So I'm not as optimistic to trade this one, but I think, again, we are likely to push back to the highs here. I think the dollar's still got room to fall. So my expectation is still more upside for euro. I don't really see a setup to trade it, but I'd like dollar CAD and NZD.
I like it. I have something to add to the currency conversation just for a second in terms of the economic data. So recently, this has been quickly one of the most popular charts on the Edge Finder here recently especially for our FX traders, for a really interesting reason. So this is not necessarily a price action based strength meter. It is a economic data based strength meter. And it is very popular with our users, because what it basically does here is we can look at currencies. We've all just talked about how it's interesting how, like, the New Zealand dollar, the chart looks really good, and so do the fundamentals, right? So we have the British pound and the New Zealand dollar. This doesn't necessarily mean that their economies are just the best economies. It means that relative to the expectations put out by the analyst community, right? Whenever we see like NFP, the forecast is this, and then the actual number, we compare those two numbers in the Edge Finder very closely. Well, what this is showing us is that in terms of the economic data reports that our system monitors, your strong kind of currencies here in terms of recent economic performance would be the British pound, which all three of us have been talking about, the New Zealand dollar, and also the close neighbor of the New Zealand dollar, the Australian dollar. And then on the flip side of things, we could see the more clearly bearish ones would be the euro and the Japanese yen, which I think is why, Marko, when you mentioned the kind of thing that you saw on the Edge Finder with New Zealand dollar versus Japanese yen, you can see that divergence, right? There's that divergence in economic data. So that's the cool kind of concept here with just incorporating a little bit of that comparative analysis. And then we also see it oftentimes. That's why I love these streams, is because we take that concept and then all three of us look at the technicals and we look at the charts and say, is it actually cooperating and moving nicely? So our neutral readings would be the Canadian dollar and the US dollar at this time, but we have a lot of data coming around the corner for the US, which could also shift it one way or the other. So we'll have to keep a close eye on that. Miko, I want to come right back to you really quick on the metals too, because silver has been interesting.
So market got all excited about some NVIDIA, and here we are fading for the day. So I still look back at these weekly candles on SPX, SPY. It's still a bunch of noise. So we've got this high here around 59, what is it, 59.60? 59.60 resistance and 57.70 support. That seems to be where the market is kind of stuck at this point in time. We'll see. End of the month is tomorrow. GDP numbers came in a little bit softer as expected. It was expected to be negative, so it came in negative 0.2. I love how that's green. We forecasted negative 0.3 came in 0.2. It's like, okay, great. Anyway, unemployment claims jumped a little bit. Home sales down, pretty big margin. And that's it. But I think that was kind of baked in. NVIDIA earnings yesterday, like they beat once again. They did like a double EPS revision, which I thought was interesting. So for the day, we'll kind of keep an eye on things. Are we going to, take out some lows? I mean, it was kind of a wild move on Tuesday. So are we going to maintain this, gap at all? Or is this going to be a gap fill? Actually, one way I might end up looking to trade this would be, could I do, are we going to fill this gap? Let me see something here. If we fill this gap, could I make some money on this trade? 58.05. Let me look at a trade right now. Oil. Currency strength. Dollar taking a hit today. Euro on the rise. See where my euro dollar position is right now. Back up into profit. So the 1180 is my buy trade. Back up around 170 pips or so. About 170 pips. Looking to see if we get back into 1550, I think. 1500, 1550 is my take profit. So if we're going to retest this high, it's the same as the dollar index retesting the low. I wouldn't be aggressively selling below the lows. I really wouldn't. I mean, if this gets back down to the lows, I would be taking profit on anything dollar index related. I think I did have an opportunity on my Aussie CAD to get a dip. So hopefully I'm getting some swing trades in here on Aussie CAD and New Zealand CAD. I mean, I like this level a lot. These trades, and again, why do I like these trades? Because they're boring, and I'm not really worried about them. They'll find pivots, efficiencies. Like, this is an inefficiency, in my opinion, that, I mean, I don't mind just taking a trade in here, 1. Taking a swing trade at like a 50618 pullback, 2. Taking a trade at the lows, 3. And letting this thing, like, I can lose, I can win, and make money on the trade. Like, Aussie CAD, New Zealand CAD, I never mind dollar cost averaging into those currencies because they tend to not trend. Okay. Japanese yen, never want to do that. Dollar basket, when it's trending, would never want to do that. So, it's like, this is what years of trading Forex has taught me, is there are certain currency pairs that behave very efficiently. And those are some of my favorites because I trade crap out of them when they don't really trend. If they do, like, look, they'll trend like, oh my gosh, this thing went up 700 pips, right? But then what did it do? It proceeded to fall back about 70 to 80% of that. So the same thing is here. It's like, I like the structure. I'm hoping that this will find a swing trade and head back up to the highs. If it falls lower, I'm still going to buy it here at this low, and I'm still going to buy it here at this low. And as long as I know my break even, I'll turn it into profit. Okay. All right. So let's go to some Swiss crosses here. Yen, press your luck on the yen. Aussie Swiss, still waiting to see if this will grind back up to the 200 moving average. Aussie New Zealand is falling lower. I'm looking to see if we can get filled. I want to get filled at 106 if possible. So I'm just holding a buy trade on Aussie New Zealand. Now I've actually got some positive swap in Aussie New Zealand, which is nice. But I'm willing to buy in some more at like 106, 103, and parity, and just kind of ride this bigger range. Aussie dollar. I mean, how I don't know who's trying to trade this right now, but it's like, how much fun is this environment right now to trade Aussie dollar? It's not, so it's like, if you're holding this thing small, right, and then be willing to kind of say, okay, trade 1, trade 2, maybe a deeper trade 3, stop loss below the swing. There's open space here that I think we'll get to. I mean, I think we'll see like the dollar rebalance a little bit, but probably continue to bounce between, the lows around this like 98 handle, and maybe come back to parity. I mean, I don't know. It's like, it's really important that the dollar doesn't get too much damage below, 97 If we're doing that, then all of a sudden our U.S. bond market's going to be showing some frailty and some jeopardy as well. Like, that's not a good thing. So I think this like parity handle is a big deal. And for years now, we've kind of settled in where it's like, okay, we tested, but we faked out. We tested, but we faked out. We obviously breached it. But is this also like, well, that's enough damage for the dollar, we're still going to be range bound? I don't know. I mean, I don't think there's too much to the downside here unless this is another like divergent level and then all of a sudden the dollar puts in a bottom. So we will see. Meanwhile, oil, gold, silver. Oil is still right in the mix of sideways. Floor at 55, ceiling at 65. Gold. I'm still going to wait. Lower highs for right now and lower lows for right now. And I'm hoping this will continue a little bit longer. So can we continue to like 3,000, maybe down to 2,900? I think for the dollar to make a move to the upside, that will bring gold lower. The equities markets have clearly moved higher. You know, we've seen the NASDAQ go higher, the S&P move higher, this big melt up since the bottom on April 7th. But, you know, gold is clearly consolidating. I don't know if I would take the bait if gold is going to get back to the highs. I don't think that's a buy trade for me. I think it's still a wait and see. I think this might just be consolidation. So I'm just looking to kind of patiently map out some lows here and let my moving averages catch up and see if price will just find it. Right? If price finds these at levels, then I'll get into some gold futures, I'll get into some GLD, and I'll add more exposure. But I'm not chasing gold at highs other than holding the positions that I already have, which are fine. I'll hold them, but I'm not adding to them. Silver, repeating this a lot now, like, you know, I like 29 if we pull back to that support level. I love silver if we break 35. If we break 35, get into the 40s, silver could be a really, really good trade. This could be a great catch-up trade with gold versus silver. If this gold-silver ratio ends up falling back down, I would like to see if silver price, the spot price, is above 35. If we're above 35 and we get into the 40s, silver gets pretty exciting. So, something to watch. Bitcoin, overbought with divergence. I fully expect the technical pullback. I still think it's a chance to accumulate. I would still be adding more exposure in here, and even back at the lows. If all this is a range, it's going to be a little just disappointing to see a range trade. But also we could see the range of the markets, right? Maybe the market's not going to get all-time highs. Maybe the market's not going to get to recent lows in April, but we have something sideways. Make sense? I mean, is it possible that the market is not going to make anything good? Like, it's going to be a trader's market. If this is what 2025 looks like, it's going to be a trader's market. You know, and maybe we're unclear. But having the markets pull back a little bit, I would say I'd welcome that. I mean, my gosh, like, welcome a pullback here. Everyone's going to get nervous if the market starts to dump again. But I still think there's just so much good structural support in here that buyers would be interested. And again, I may not like buy immediately, but I will certainly be interested in positioning for option trades out of the way. You know, I'll like intentionally position like 1-1 trades and ratio spreads at these lows because I don't think we're going to hit them necessarily. But I want to see a slight increase in volatility so I get more premiums. Yeah, but we'll see. So if this market just keeps going higher, then okay, cool, I guess. But I'd almost like to see a slightly lower high and we can just have a wedge. You know, this is a good trading environment to make some money. There's income trades galore in here. You know, you can sell a lot of covered calls, you can lower your cost basis, you can do a lot of things and help your portfolio, right? You're not just going to get crazy directional profits, but you can certainly, you know, option trade your way to a lot of income, which is likely what I'm going to do.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.